Welcome back to the Liquid Math channel, where we use AI-powered market analytics for crypto investors and to those who wish to learn about crypto market analytics. As of December 10, 2025, Ethereum is trading near $3,398, while the broader crypto market remains cautious. The Fear and Greed Index sits at 30, which places sentiment firmly in the fear zone. At the same time, the Federal Reserve has just delivered its third rate cut of 2025, the dollar is weakening, gold is holding above $4,200, and global yields are retreating. This creates a rare environment where macro liquidity is improving while confidence is still low, and that matters deeply for Ethereum. Angle number 1: Ethereum survived a full cycle flush and recovered. On February 13, 2025, Ethereum traded near $2,676. Earlier in the year, it suffered a brutal drawdown of more than $2,000 during a mid-cycle liquidation phase. Yet as of today at nearly $3,400, Ethereum is now up roughly 27% year-to-date. This is not the behavior of a weak asset. This is what leadership looks like after structural repair, deep damage, full recovery, then higher consolidation. Angle number 2: the multi-year structure is still dominant. Let's zoom out for this one. On March 9, 2020, Ethereum traded near $125. As of this week near $3,400, ETH is still up more than 2,600% in under 6 years. Go back further to September 2015, when ETH traded under $1. The full cycle gain now exceeds 460,000%. This tells us something that is not obvious in short-term charts. And that is that Ethereum remains the primary long-term growth engine of the entire crypto market, not just another altcoin. Angle number 3: Fear at 30 while Ethereum holds $3,400. Fear at 30 usually suppresses price. But Ethereum is doing the opposite. It is holding near yearly highs while the crowd remains emotionally defensive. This is one of the most reliable early bull cycle signatures. Sentiment is hesitant. Positioning is light. Price trends quietly upward anyway. This signals under ownership, not exhaustion. Macro context: why the backdrop now favors Ethereum. The Federal Reserve has now cut rates 3 times, bringing the policy range down to 3.5 to 3.75%. The dollar index has slipped below 99, and US yields have pulled back sharply. At the same time, gold is strong, the euro is strengthening, and global growth projections are being upgraded. This combination, lower real yields, weaker dollar, improving growth expectations, is historically one of the most supportive environments Ethereum ever trades in. And now the Liquid Math Market Pulse Index for Ethereum. The Liquid Math Market Pulse Index, LMMPI, is something that I came up with, and what it does is that it scores the coin from 0 to 100 based on price structure, sentiment, macro pressure, hidden signals. 0 to 20 is extreme risk, which means panic conditions and a high crash probability. 21 to 40 is defensive zone, means that fear dominates. Only high-risk setups. 41 to 60 is neutral zone, which means that the market is undecided. Choppy with mixed signals. 61 to 80 is constructive zone, which means that data favors continuation. This areas holds the best risk-reward ratio. 81 to 100 is overheated zone, is strong trend but growing blow-off risk. As of December 10, 2025, the Liquid Math Market Pulse Index for Ethereum stands at 70 out of 100, which is bullish. This score reflects a strong structural recovery, positive divergence versus sentiment, macro liquidity tailwinds, and volatility compressing into strength. This is a trend-building environment, not a speculative blow-off. Based on structure, sentiment, macro conditions, and volatility behavior, Ethereum is most likely to grind higher into the $3,600 to $3,900 zone in early 2026, rather than suffer a major breakdown. Pullbacks toward the $3,000 region can still occur during volatility spikes. But the dominant probability favors continued higher lows, not collapse. As of December 10, 2025, Ethereum is no longer repairing damage. It has already repaired it. Now it is quietly rebuilding conviction in a fearful market with improving macro liquidity behind it. And that is how major trend phases begin. This has been the Liquid Math, where we analyze and draw conclusions regarding various coins with the help of AI. Subscribe for the next Liquid Math update and hidden signal breakdown.